A UK pension fund is investing 3% of its assets in Bitcoin. This is the first of its kind in the country. It's a move that has sparked heated debates because some are calling it visionary while others are warning it's a reckless gamble with retirees' futures. And today we'll dive into this groundbreaking decision. Why did this pension fund choose Bitcoin? What are the potential risks and rewards? And most importantly, what does it mean for the future of crypto in traditional investments? Stick around because we're breaking this down from the expert opinions to the big picture implications for the crypto and pension industries. And so don't forget to hit that subscribe button for more insights like this. Okay, so here's what we know so far. An unnamed UK defined benefit pension scheme has allocated 3% of its assets to Bitcoin. And while that might sound small, it's actually a significant shift in how pensions approach alternative investments. And we also know that the decision to do this was guided by Cartwright, who are a pension specialist, and they are claiming that this move offers diversification and taps into Bitcoin's asymmetric risk-return potential. In simple terms, they believe the potential upside outweighs the risks. And Cartwright have actually explained that their approach limits potential losses whilst positioning the fund to benefit from Bitcoin's growth, but not everyone agrees. So let's talk about why some see this as a smart move. Bitcoin has been the best performing asset class over the past decade. Yes, you heard that right. Even outperforming major indices like the Nasdaq. And some people are advocating or arguing that allocating even a small percentage of a portfolio to Bitcoin can actually provide outsized returns without exposing the entire portfolio to high risk. And some people might even argue that this is quite sensible to allocate a small portion of your portfolio to something that's risky. And in fact, actually, US pension funds have already embraced crypto investments. And, pension schemes are just portfolios of numbers. And so if Bitcoin aligns with the fund's risk appetite, it can fit just like any other asset. And let's not forget that Bitcoin's price is currently riding high, it's driven by increasing adoption and institutional interest. And so for some, this is an opportunity that is just too big to ignore. But here's the other side of the coin, so to speak, and that is that Bitcoin's volatility is a major red flag for many experts. And just last week, it hit a record high of over 100k, but less than 2 years ago, it dropped below $17,000. And that was just after the collapse of FTX, if any of you remember that. And I've seen quite a few statements about this particular piece of news. One was from a guy called Colin Loeb from Kingsfleet, and he's actually criticised this decision. His words were that it was speculative gambling, and he's argued that pension funds with their sort of long-term investment horizons should actually focus on stability, not on assets that have, as he puts it, no intrinsic value. There was also another guy from a company called Wiltshire Wealth who described this move as deeply irresponsible, and he pointed out that pension trustees have a legal obligation to manage assets prudently and that this decision could jeopardize that trust. And if you go on the Financial Conduct Authority's website, which is basically just an arm of the government, they actually advise caution, and they state that anyone investing in crypto should be prepared to lose all their money. So how does this align with the principles of long-term pension planning? Well, let's break down the mechanics of this decision. With a 3% allocation, the fund isn't putting all its eggs in one basket, and if Bitcoin performs well, then the gains could significantly boost the portfolio. But if it crashes, then the loss, while impactful, is limited. And it's also worth noting here that this is a defined benefit scheme, which basically means that retirees will not be bearing the direct risk. And so instead, the employer is responsible for covering any shortfall. But even so, critics are still going to argue that the reputational and financial risks are just too high. And so really, I suppose the big question here is, does Bitcoin's potential outweigh its volatility? Advocates believe that it is worth the gamble, especially as crypto adoption continues to grow. But skeptics are warning that Bitcoin could ultimately become worthless. And the bigger picture here is, that it's not just a decision about one pension fund. It actually reflects a larger trend of traditional financial institutions that are slowly warming up to crypto. In the US, pension funds have already started to incorporate cryptocurrencies, and some believe that the UK is or needs to follow suit to actually stay competitive. But there is a lot of controversy surrounding Bitcoin and especially cryptocurrencies in general, because we've got this kind of lack of regulation. We've got some are arguing environmental concerns, and we've got volatility and extreme price swings. And this, for a pension anyway, a pension fund, it makes it kind of a polarizing choice. And with Bitcoin adoption growing globally, will more pension funds follow suit, or will this remain a one-off experiment? Either way, this debate is highlighting the growing tension between innovation and caution in the financial world. So what's your take? Is this pension fund ahead of its time, or is it taking an unnecessary risk? Should Bitcoin have a place in retirement portfolios? Or should pensions stick to safer, more traditional investments? Let me know your thoughts in the comments below. And if you enjoyed this deep dive, make sure to like this video, subscribe, and hit the bell icon to stay updated on crypto and financial trends. I'm Chris Kenyon, this is Enter Crypto, thanks for watching.